All right, guys, we are back. And today we have a special episode with Gert van Lagen. Thank you so much for being here.
Hi, Bitcoining. Nice to be back in your studio again. And yeah, Bitcoin is doing really well. So we too, right?
Of course, of course. I'm very happy to be here today with you. Thank you for taking the time. Of course, this is a very special episode. It's the first one we're doing digitally, and also I think it's a great time in the market to look back at like the 2 years period that I know you, because we've been talking about the price of Bitcoin for a long time, and I know we are not near the targets that you are putting out there with your analysis. I've pretty much been saying the same targets or similar targets, which exceed 400,000. But we got so much shit over the last 2 years of non-believers, of doubters. But
Yeah,
this
absolutely.
far,
There were a lot of complaints and laughs and so on, but the trend kept going up. So never fight the trend, you know.
of
Um,
course.
and Bitcoin is already like 6x up, 6-7x up from its bottom. So it's only 3x to go for my main target at around 300k.
Yeah,
So
perfect.
people were laughing at 40k, about 300k, but now I see people like, okay, might actually be happening soon.
Yep.
So,
What is so interesting to me, Gert, is that the institutional buyers, investors, they are adjusting their targets as well. Because I think about a year or maybe 2 years ago, during this period at least, there were a lot of institutional investors, but also influencers online, who were saying 120k top, 150k top, max. But now,
they need
further
to
ahead,
shift.
they need to shift. Why
Absolutely.
why are they shifting now, and why didn't they see the same targets before?
I think they didn't believe even the 120k was to happen, and then it's kind of being conservative. But when Bitcoin gets finally the rally we are foreseeing, well, they need to adjust. They say, okay, it can be within hours beyond the target they mentioned, right?
Mhm.
So it's a classical thing of thinking linearly and not exponentially. And we saw the same thing happening back in 2017, back in 2013. We see people claiming like, okay, if I see in 2017, people were saying, okay, price were around $1,000, 1,100 dollars,
Mhm.
and the main targets were around 2,300.
Mhm.
So comparable to now, you would say, okay, when breaking out of the 69k, okay, that would be around 120k. That's the max. But price target went to 20k back then. So well, 10x beyond their expectations.
Mhm.
Um, if we compare it to the 2021 move, which is more recent and a lot of people might still remember, main target there was around 25k. But we went all the way up to 69k, so about 3x more than. That's what I'm anticipating right now again with the 100k. It's linear thought, because on all linear charts, these are really high targets.
Mhm.
But when looking at exponential charts, yeah, it's an exponential moving asset. You're missing the clue.
Mhm. Fully agree on that. So in the meantime, did anything major change? Because I do remember that you told me before, you explained the whole the Wyckoff model that you're using to make one of your analysis at least, and you told me that the longer it takes for the parabolic pump to come, the higher it will go, right? Because it is a logarithmic chart, so the targets go up more the longer we wait. Did anything significantly change right now?
Well, my model was like predicting a 200K back in last year, but since the structure was less explosive than I was anticipating, the target shifted indeed to about 320K right now.
Mhm.
So that was also what I was mentioning back then. Like, okay, it doesn't matter if it takes longer. The longer, the higher, the better.
Mhm.
Yeah, that's a bit of reversed mindset.
Mhm.
A lot of people don't like to wait, but sometimes you have to wait
Mhm.
to have larger gains.
Yep.
The structure I can show maybe.
Yes, of course.
Let me see. I brought a chart with me, of course.
Okay, give me one moment. All right.
Yeah, nice. So here you can see the whole Bitcoin trajectory since 2009 up
Mhm.
till now. And on the horizontal axis, you find the Bitcoin blocks. And every 10 minutes, one block is mined
Mhm.
on average. And so it's like time. So every 10 minutes, one block you can use it as a time on the axis, on the x-axis, and on the vertical axis you find a logarithmic scale. You can see it goes from $1 to 10 to 100 to 1K, 10K, 100K, and then in the green line you find 320K, which is now my the target, which so which I'm foreseeing if price pumps right now to uh, to the trend line through the green line. You can see my cursor, right?
Yes,
Okay,
yes, yes.
so
We can see it.
through 1 and 3 in green. So
Mhm.
the thing I'm charting here is we have an Elliott wave. An Elliott wave consists of 5 waves, and in
Mhm.
green you find the main wave. So we have 1, 2, 3, 4, 5, and each wave can be subdivided in a subwave, like 1, 2, 3, 4, 5, and 1, 2, 3, 4, 5, and 1, 2, 3, 4. And that was a reason I was foreseeing a break of the all-time high of 69K, because we had not had a fifth wave here yet.
Mhm. Mhm. Mhm.
What's nice to see is the channeling method basically says if you want to project the top of the fifth wave, so
Mhm.
this point here, you need
Mhm.
to draw a line through 1 and 3, and also this mid cycle, which is the momentum phase, which is the largest subwave, consists itself of a large Elliott wave, where each wave can be subdivided even more. So this 2, 3, for instance, is a big one. You can easily subdivide it in 1, 2, 3, 4, 5.
Mhm.
And so the thing is where at the bottom, each time the 210,000 blocks average, it's like the halving average, the amount
Mhm.
of blocks it takes between each halving, um, is a very strong support for this bull market, because Bitcoin has ever had a bear market
Mhm.
yet, because there hasn't been a recession like 2008.
Mhm.
Actually, Bitcoin was a response to it, and we have only seen an uptrend so far. So
Yep.
once price would break below this supportive um, range, it could
Mhm.
take several halvings um, to cope with that, to break even or back up again for people buying here at the top. So
Mhm.
this is really
Uh,
a macro structure,
mhm.
and the final thing which makes me say, okay, if we pump directly from here to the target line,
Mhm.
is that it's a fifth subwave. So if we keep counting, zooming in more and more, and
Mhm.
every subwave itself, if you draw an if you measure the angle, it's like 82 degrees
Mhm.
on this chart, to the actual top. So if we take the last real shakeout on a high time frame, and then draw like a line to the top, and we measure the angle, and every time we get 83, 82. So if you project that into the future, it means for now that Bitcoin will reach its target before July 5th this year. So
okay.
within 6 weeks. That's what was happening back in 2017, in 2013, in 2011. Each time at the blow-off phase of such an parabolic move. And so two lines can intersect, and they intersect now at 320K. Given we don't get another long-term correction, and the reason I don't see that coming is the S&P 500 clearly has shown strong weakness. So, and from a lot of perspectives, I can dive deeper into that if you like, but it's clear the recession already has begun. And
why do you say that? I do see that there's a lot of issues with the bonds of the 10-year bonds. Also, Japan is on
that's exactly what I was
silver thread.
Hoping you would ask, because I've here this chart of the 10-year yields.
Yeah. Okay.
In black and in purple.
Gert, sorry. Before you go here, I do want to go back to the previous chart real quick and share a piece of my mind, if you don't mind.
Yeah, sure, sure.
Because this estimation is made on the fact that you think, or if we pump now, then the peak will be the 5th of July, you said. But according to my analysis and overlapping previous cycles to this current one, it would make a lot of sense if we were to have a regular cycle, that the peak would be somewhere between August and November instead of July, just based on the fact of looking at previous cycles from bottom to top, from halving to top, from top to top. You get like an average period of when it should happen in the Bitcoin cycle. And also, what I would like to add is that I see a lot of very bullish macro economic events happening right now. So, for example, end of July we will get the Bitcoin executive order report of the United States purchasing Bitcoin, how it will happen, when it will happen, and how much. And also, I think they are working on the Bitcoin Act right now. The proposal of Cynthia Lumens, where she will buy, or they are intending to buy 1 million Bitcoin over a period of 5 years, which will, if they accept it, will be somewhere early 2026. So I have two questions for you. The first one is, why are you projecting that we will pump now and have a top in the July instead of the regular average? And my second question is, we have been speculating on a second scenario, which is that we might get a slight extended cycle because of all the things that are happening in the world right now. So we have the tariffs that are still ongoing and suppressing most of the markets. We get major developments in crypto on federal level in the United States, somewhere end of this year, early next year. So I fully agree on most things you're saying, but don't you think that this still is a little bit too soon?
Well, let's start with the first question. So why I'm foreseeing it right now, and the reason for that, it lies basically in the Elliott wave theory, like the fifth wave. If it's a single wave, it's a blow-off wave, and it will be very aggressive. And then it's just the intersection of those two lines through the 1 and 3. Can we get an extension? Of course, each wave can extend, and that's also what we have seen with the third wave of this last wave up. So I see you put a chart on the screen again. So if we go from here 4 to 5, we have here an extended 3 wave. So if the fifth wave itself contains several larger time corrections, then I have to reproject it. Obviously, the final part, the final wave up, if it goes straight like the last 3 times it happened, then it's projected around July 5th. But there's always room for a correction.
I don't necessarily want to say correction. Of course, they can happen, but you have invalidation points. But what if we were to go sideways or just pump a little, and let's say we go to 150 or something, and then go sideways again?
Then we have to really zoom in on this part on a lower time frame to see what's happening there, because I can show that here. I can do it here, but one thing I like to mention is this chart, and it's the reason it's a monthly chart, so there's always room for a bit sideways action here. So from this chart, the timing is not a must. But we were talking about the US 10-year yield, which is shown in black here, and in purple we have the federal funds rate. And each time before a recession hits, we have the 10-year yield basically dropping below the federal funds rate, and then right before a recession it reverses back up. So the black candles cross back above the purple line. Then during a recession you see it normalizes basically, because this is not normal behavior for long-term bonds to be the yields are lower than the federal funds effective rate. That's like inverted graph. So each time you see here this plateauing phase, then dropping below, breaking back up, then during a recession the Fed needs to cut to save the economy basically. Then you get like at a certain point the Fed needs to increase their rate because of inflation, because money gets too cheap, etc. And then we get basically the same happening, like dropping below, then during a recession it breaks back above, and in most cases it breaks through the federal funds rate, through the purple line, during the recession already. And that's also what we are witnessing right now, I guess, because the federal funds rate broke in November 24 already out of the back above of the federal funds rate, and currently it's keeping up with that. And the projected rate of the Fed each 4 months, they share their expected trajectory for their fund rate, and they're expecting like 3 cuts this year. So in purple, I've here projected like, okay, this is what's going to happen according to the Fed itself. And the 10-year yield keeps pumping above, and that's something only happening during a recession. And if we look at the S&P 500, it really has broken the uptrend since 2023 really strongly, and has put in a low like early 2024. Really strong dead cat bounce, I would say. Could we see another all-time high? Maybe, but I think it's rather going to be a sort of double top construction and then really hitting a big recession.
But this low was also created by the tariffs, right? By Liberation Day, how Trump called it. So aren't we going to see better stocks and all these things? Because if we take a look at what Trump is saying, and of course the data speaks for itself and Trump speaks for itself, so they're two separate things, I understand, but he is really trying to get the rates down, because he calls Jerome Powell too late Powell. he wants to cut the rates, but also as soon as the tariffs were put on a pause, pretty much all the stocks went back up. So don't you think that once uncertainty clears, which is somewhere around 10 August for China and a little bit sooner, end of July for most other countries that had a tariff pause, don't you think that this will in fact boost the market a little bit because the uncertainty is gone?
There's always room for boost. So it could pump from like to 6,000, right? If we get a dip now, and then it could pump a little. What I'm foreseeing is that we are rolling over here, and that may take some time for the S&P 500. But once it breaks down like this is really this is not these are multiple weekly closes below actual supports, which was really support. And also on a higher time frame, I've got this chart for the S&P 500, and it's like Bitcoin. It has already hit the fifth point when drawing the 1 at 1929, the 3 at 2000 top, and that was also we were discussing in 2022. I remember, like, okay, S&P 500 needs to pump, and it has done so, and has hit its target, and now we see this really harsh correction. So, aside from all narratives, if you're just reading the chart like that, and there will all look, narratives will always fit the chart. There will always be a room for a pump, but the severity of the pump will be determined by the market structure. And so what I'm seeing here is really a rotation of stocks. We have here this cup and handle, which broke out and has hit its target exactly at the line, which is shown on the really high time frame. Bitcoin has made a similar cup and handle, but has really not hit this target yet, which is around my target. Aside, look, this is totally different analysis than the one I showed just yet. But so what you're seeing here is like this cup and handle. If you project the target here, it's around the 320k, which so it lines up with a final push for Bitcoin. And if we are looking at, we were talking about those people with a linear vision. I call them red arrow people. Red arrow people are like, okay, this is the target, and then around that zone you get some resistance of early people getting out, don't seeing the actual wave coming. Then you get a real move to the exponential target. So we can see it here in 2021 again. Yeah, so around this zone, a lot of people have scaled out, and you see it was like halfway, not even so. So if you project it in the same manner on the linear scale, so that's basically going to a regular scale, you get this chart. This is what people are feeling and are seeing if you are a linear, and you project like this cup to be a linear target, you get about around 120k. That's exactly what I've done for each target. So that's what you're seeing. So if I move to a logarithmic scale, then the actual target for a logarithmic move is to 320k, which lines exactly up with the chart. This chart I've shown. So I'm also looking for two scenarios, like one before the summer, if it's a straight impulse. If it gets a bit extended, I see it like the 4-year cycle playing out, but I give it a really lower chance because of the 10-year yield already breaking up above the federal funds rate for months in the meantime, and all previous times recession already started back then. So
I just saw in your chart you called it a Great Depression too. But yeah. you're pretty much saying that it is possible to get an extension, but it is unlikely because the current situation of the economic are just terrible. A recession is coming. Prepare.
I think so, and it's not a look. Big investors like Warren Buffett, he just quit. Maybe also a sign on the wall. You see, so something is big on cash. He scaled out fully and really has scaled out at the current top of the S&P 500. So he's also looking at a chart like this, obviously, and economy hasn't really had the problems which were created with COVID have never fully
fully agree.
Yeah, so we still have that flush out coming. So that's basically, in short, my view, how it's going. And also, if you look at the dollar, it's really part of the puzzle, in my opinion. The dollar is really breaking down at the moment. So we have had this uptrend. So for the S&P 500, it has broken its uptrend as well. We have now the dead cat bounce for the S&P 500, but it can take obviously months for that to play fully out. So yeah, when it starts to lose structure like we saw here, then yeah, it's clear the recession will go through. So if you look at this expanding triangle structure, we have it similar here in line. You can see price has broken below it, has retested it for a bearish support basically, and got rejected there. And now we have a nice continuation candle, which looks like it's going to close below. Tonight it will close. So it has only 3 hours to close back up around this, around the 100 line, but it doesn't do that, I think. And then we have a bearish confirmation for this breakdown with a target at 19.1. And each Bitcoin pump, like in 2017, we have here this downtrend for the dollar. In 2021, we have also a really nice bump, followed by a big uptrend, which was the bear market, basically. So we see here now a nice expanding triangle breaking down for the dollar, hinting at another huge volatile move, maybe incoming. And yeah, that's what we are looking for, which also makes Bitcoin pump the final part.
I have a question about the 10-year yields. Is there a way to prevent the recession? So can there be extreme cuts, or can there be something else being done, like quantitative easing or something like this, to postpone it, or maybe even cancel it at all? Are there things that can be done to prevent the recession? Because when you take a look at what Trump has been announcing, he's saying that, we will keep winning. Everything will pump. The stocks will go crazy. He's making bold statements. Of course, he's a bold kind of guy. But why do you think he's saying these things while he's looking at the same data? Because he's not a stupid guy,
Well, he doesn't look at the same time frame as we do. So for him, he has a 4-year time frame. So in 4 years, people will like, okay, he was a good president because economic growth was great or not. So we are obviously looking at like only this year and a bit into the next year. So the time frame. So if you have a general remark like stocks will grow over the next 100 years, yes, I totally agree. This will be noise, obviously, but if you want to be in the market, it's still relevant now, because it will shift with tens of percents of your holdings. But coming back at your question, like what should the Fed do to the Fed has no control over this. The only thing they are doing is like, okay, we have inflation, so we have some tools like the federal funds rate. It makes it harder to get cheap money, basically. And so the economy doesn't grow as hard as it used to be. But once the economy gets too tight because of their regulations, you see it toggle over, basically. That's exactly what you can see here in the chart. You see, okay, inflation. Okay, we get some signals from the economy that either the inflation stabilizes back to 2%, which is their goal, And then they wait and see. That's also what they are saying at their press conferences. Like, okay, we are waiting and seeing what will be happen. There must be some break somewhere because the economy, something underneath, is not going good, and they're cutting rates because they see their rates are doing the work. The inflation comes down. But when a recession hits, they need to cut to save the economy, and that's what you can see during each recession, which is in green. You see they cut like very steep back to 0% in 2008 within a year, and in COVID, during the COVID dip, it was really like, okay, within a month they were back at 0%, really to grab some money to to save your accounts, and then later on we talk about it. And that's the inflation that hit really hard, obviously, and then they have to fight the inflation back again with even stronger rates than they had here in play. And at a certain level, okay, we get the inflation back under control. Okay, we need to pause and then start cutting because we get all kinds of weird reversals on yield curves. And you can see it normalizes right now, and they are projecting themselves. They need to cut further because they're expecting their measures to do their work, like inflation under control. So what should they do if they can't do anything about it? They will react to save the economy, or when prices are stable and inflation is good, they will be just sitting and waiting until something happens. But they're not directly steering like, okay, we don't want a recession. They don't know if a recession will come due to their the things they have in play here.
Okay, interesting. And if a recession comes, is there a specific estimate for the timeline? Because you made a area red, right? I think that is like your estimation of when a recession might happen. But could a recession happen all the way end of 2026, for example, or is it coming real soon now because of these things happening? What are your expectations of this?
Well, my expectation is that we are already in a recession. So in 2026, we will look back at the current period and say, okay, that was that cat bounce we are witnessing on the S&P 500, for instance. There's a little room for another touch of the trend line I drew, and that's because if you look at Elliott wave structure from the bottom up here, you could like chart it like we have here the first wave up, then first correction, which is not that sharp, right? It's not like going back all the way where it came from. Then we have an impulsive wave all the way to the trend line. Then we get a fourth sharp correction. So normally they alternate between one sharp and one flat correction, so that fits. And then we get one final fifth wave, which is a blow-off wave, which might touch the trend line or even overextending a bit. And then we get like a bearish divergence between those two tops, yielding in a really sharp big drop later on. Also about it's a nice thing to mention as well for Bitcoin. Well, this is the S&P 500. We have here let me see, I had something left here. So I've got a lot of charts which basically point to the 360K just based on what happened in the past. So here we have like the Bitcoin. We have a symmetrical triangle in 2019, 2020, which broke out in 2021 target and hit its target. And then if we have now broadening wedge, which is basically a mirrored version of the symmetrical triangle we have here. It diverges instead of it converges. It has broken out really strongly and retested the trend line, which I've made purple. And then we have the big move coming in. And the confirmation for that was really setting an all-time high. So we have confirmation for this to really break out fast. How fast, we'll see. And the later, the better. One thing I like to mention is the RSI on the weekly. Yeah, it's like gauging like where if we have here we have. Let me see. So a lot of people have pointed out this bearish divergence we have here, and are not talking about the hidden bullish divergence, which is more recent. You see, so this is a hidden bullish divergence with which basically means if you kick a ball like on grass with a certain momentum, it will roll a certain distance. But if it rolls in sand, you give a similar kick, it won't roll as far. So if you push harder, the price doesn't go even lower than it was back then. So you can see there's bullish momentum in the market, which now really plays out. And the bearish momentum, there was obviously was also there. So we really need to see here the break of this RSI for the 300K to be hit.
Yes, because a lot of people are expecting the RSI to hit the trend line there, right?
Yeah, sure. This one, you mean? And then we have a double divergence and also rising wedge. Now, well, we can draw here the charts we'll see next week on X for a bearish outlook. Yeah, but still, this is a hidden bullish divergence, which is also the trend itself is bullish. It's really up. So the trend is your friend, never fight it. And if you are looking really at the bigger channel where price lies in, we're nowhere. It's more like this. It's like a channel. We're at 200K, around 170K is really a target which will yield some resistance, in my opinion. It's also a high time frame Fibonacci resistance, and it lines up with this channel.
Yep. And also a lot of targets have been made around this area, so I expect a lot of resistance just based on psychology, man.
Yeah, sure. So if we are looking at your thesis, like, okay, maybe we get an extension, so then we need to subdivide the move to say 350K into, okay, we hit, okay, maybe 170K before the summer. Then we fall back to 130K, which is also a big thing.
Already like what you're saying. Yeah, continue. Go.
Then we get a next stop, which breaks up, and we get a retest, which is really sharp. And everybody's talking like, okay, that was it. And we get the final top into, and we are in October 25. That's a scenario you're thinking plays out. There is room for it, obviously. The chart I first have shown is really okay if we get the direct impulse which we have had always at the final wave. Then it should be earlier.
Okay.
Yeah. So
I have one question, and then I would like to cover some of the questions in the comments. But
Nice.
we spoke a lot about Bitcoin right now, and of course S&P 500. Is a recession coming or not? However, a lot of people are exposed in a lot of altcoins. The altcoins are not showing a very strong picture right now. Of course, we've seen a reversal. We at least bought the bottom and the reversal, but we are kind of hesitating, to be fair. Is this a Bitcoin only run? We are seeing a major trend in Bitcoin treasury companies, especially the stocks, Meta Planet, for example, other stocks that are now deciding, publicly traded companies that are deciding to put their treasury in Bitcoin are getting some momentum. It seems all attention is at Bitcoin. Is it smart or stupid to be in altcoins at all right now? Because altcoins are not showing that much strength right now, right?
Well, it depends on if you want to grasp the altcoin rally. You really have to look at the Bitcoin dominance. Bitcoin dominance is really. I've got a chart here. Let me see. This is a bit too noisy. Let's move to a higher time frame. Let me see. So the Bitcoin dominance basically says, okay, it's better in an uptrend to have Bitcoin. So over the course of the last 2 years, it was better to have Bitcoin than altcoins in general. Some altcoins obviously outperform Bitcoin, but in general. What you see during alt season is that Bitcoin really loses its dominance because some Bitcoin there are a lot of Bitcoin versus alt pairs. Bitcoin will be swapped for altcoins. The thing here is that the uptrend of the Bitcoin dominance has broken in November 24, and now we are seeing a struggle around this uptrend to break back up, which is not successful yet, and we see a bearish divergence between those tops. Something we were discussing about Bitcoin later on, maybe. And that's also what we saw at the 2021 rally. Like we have a breakdown of an uptrend, then a retest, trying to get back up, then a fierce rejection, which yielded the alt season we witnessed. But during this time, Bitcoin was pumping itself as well. So what's happening? Yes. People are taking profit in Bitcoin and are looking for, okay, where can I put it in dollars or in other chances like altcoins? So in the final part of a blow-off wave, you see a lot of rotation of Bitcoin because they're taking profits into, well, let's put a 90% aside, but 10% into an altcoin, which looks promising at the moment because Bitcoin has pumped hard and each alt versus Bitcoin chart has really oversold. Yeah, so alts are the last in the queue to to have their pump. Much like Bitcoin had to wait for the S&P 500 to really hit its target, and now you see this 48 trillion market rotate a bit into Bitcoin. Obviously, not everything goes into Bitcoin, but a lot of if the markets go down, a lot of people are selling, right? So they're taking profits and are looking for another chance. And like on every economic platform, Bitcoin is shown to be the strongest asset over the last couple of years to be invested in. So people are obviously looking into it. So that's like the Bitcoin dominance, but I would also like to show the altcoin, the total three.
Sorry to talk about the dominance a little bit more.
Okay, no problem.
You're saying we're having difficulties gaining the support because we broke down and now we're pretty much fighting to get back up. What do you think the actual top will be? Because I see you got it below 70%, right? Why? And What are your expectations of when the dominance will drop?
Well, what you're seeing is that it's basically consolidating with higher lows, lower highs, excuse me, and we have here higher lows. So I'm expecting this top to be lower, and we've also the Fibonacci region, obviously, which lies between 62% and 78%. So this lines nicely up for a rejection here again. Given also the downtrend of the uptrend, which broke down with really the biggest red candle we've seen since 2022. So this is really a signal. Also combined with the bearish divergence we are witnessing. So a lot of things are lining up here with, okay, that's big resistance there, and we might see a red candle really soon when Ethereum catches up. Because altcoins are really lacking the move of Bitcoin, but not with the distance people are feeling. If we are looking at the alt cap minus Ethereum, we can see here that we have a cup and handle play in play with also an uptrend which held strongly, much like Bitcoin did. And we have here the breakout of the cup with a decent retest in a falling wedge shape, which is a bullish continuation pattern. And also the alt cap has broken out really strongly here from the neckline, which coincides with the neckline of this cup and handle, the target of which lies at $2 trillion. But if we look back at what altcoins can do during really a spike, they're really able to hit twice the target of such an bear market consolidation structure. And if we point it out like that, we get at 6 trillion. If we look at Bitcoin 300K, then the Bitcoin dominance needs to drop to about 50% for the alt cap to reach this target, and for Bitcoin to hit my target. So it lines up with this chart to, okay, if we get a drop to like 50%, that's all is needed for alt to rally really fast, hit the targets. Like, okay, do it. It's really like okay, it's not much. It would be a move like this.
And then there's the top of the altcoins. Is that what you're saying?
Well, Bitcoin and altcoins usually top at the same time, or maybe 2 weeks later.
Like a want, yeah, exactly.
But really, the exact top you should measure with. So how I measuring it with the MVRV. Long-term holders need to rotate their bags to short-term holders, and that's what you measure with those on-chain indicators. And those on-chain indicators are really sitting at like 50% level, and each time during the big rallies we've witnessed in 2017, 13, and 11, like those coincided with really a big spike on all those indicators really fast, which for the final push up, it's called blow off phase. It's really it doesn't make sense anymore for a lot of people, but it's what you don't only see in crypto. Obviously, you can also see it in for instance the Google chart back in 2004. It's a very similar setup, and something which grows exponentially has at its top, it's going really fast. People are not catching up and are not able to grasp the top to short it there. So it's really a spike, and then maybe some sideways action, and then a really sharp drop like we witnessed here at the free, like in 2017, 2018. We can see here this really spike up. Then this top, it was really hard to open a short here with high leverage and to really crash the top. But if you had used like the MVRV and the Rodel ratio, for instance, to see whether you were right, you wouldn't have scaled out in 2021 as well, because it didn't spike there. So this is very much a mid-cycle top, like the 4-5, and yeah, so people who bought here and are still holding and well have hodled through this period, I think they were right, because the peak, like in 2017, in 2015, and 2011, wasn't witnessed in 2021. It was a really too early, maybe. Well, manipulated double top with hitting its target and then back up for the final push. And well, time will tell, obviously. And also on this chart, 1 pixel is like a month later. So don't pin me on July 5th. That's what happens a lot. Okay, Gert, you were saying here before the fourth halving, we are now here. The main thing which I want to convey is the structure. So, okay, during this period, I called like, okay, it can drop into this one top. We can't go lower than 13.8K. And it turned at 15K back there.
Yeah.
And so structurally, I'm almost always right on this high time frames.
My wife says this all the time as well. I'm joking.
But yeah, on time wise, don't pin me there. There's always an option for the market to go sideways, and that's not something I'm projecting here.
Okay, very interesting. But at the same time, you mentioned Ethereum in your story, right? Do you think Ethereum will remain relevant for future alt seasons to come? Because there are, it's a matter of opinion, a matter of, a lot of things. But I see a lot of institutional investors buying Ethereum. However, the people who are actually using the chains, they prefer other chains because they're faster, cheaper, more innovative. There are many reasons for Ethereum to slowly lose market dominance over a period of time, right? I'm not saying it will happen this cycle or this year.
It does already, but what you're seeing with Bitcoin as well, it's losing dominance, but it doesn't mean the price needs to drop, because the value which is contained by the whole network may grow. But there are other chains growing as well. But so if you look at those other chains, obviously it will share market. So the dominance of Ethereum will go down. It's really if we get a recession, then that's really the test, in my opinion, for the real stuff will survive, and all other things will really go south of zero.
Yep. Okay. Interesting. That's actually a very interesting detail. All right. So I want to ask some questions from the comments that we went over. Arctics is asking, how low and how fast do you think Bitcoin goes down after it hits your target then, Gert? Because I remember in a previous podcast we did, you were saying that it might even go all the way down to 1K. Are you still having that thought, or did you get
absolutely.
Sanity? Yeah, you're still thinking the same. Okay,
sure.
But I want to ask you a question then, because we discussed this, of course, in our community with my friends. Ian, of course, we had many talks about the things you were saying. I loved most of your story, but you completely lost me there. And I'm not saying that we won't see a Great Depression 2.0, because I fully agree on that. I also think that COVID didn't hit. We will definitely hit a depression, not a crisis or a recession. We will go deep and very low. Not sure when. I'm just hoping on personal grounds that I cash in on Bitcoin and altcoins first, and then it may happen. But this
Yeah,
is
me
of
too.
course,
Me too.
this
Yeah,
is of course the personal preferences. But
it's still dangerous to be in the market right now.
exactly. But I just don't see a 1K happening. I can see it go back. So let's say we go to 300K, 400K. I can see it go to 100K in a regular setting. However, like you're stating, then we would still be in an uptrend. You won't have that real Great Depression impact, right? So let's assume that we, in fact, go lower than 100K. I could give you a 40, 30K minimum. Why do you think
Yeah, I see.
a 1K is possible? Because a 1K, I mean, people like Michael Saylor, they will buy the entire supply. You know,
No.
it will never happen.
It will liquidate Michael Saylor, in my opinion.
He cannot be liquidated.
Yeah, he can. He is leveraged. He is somehow leveraged. At a certain point, so there will be a point he has to sell Bitcoin to pay his loans, and his loans are not 0% rent, so there is leverage there. But putting that aside,
he is saying something else though. But
yeah, sure. But he was also in the .com bubble, and he lost all his money back then. And so that's so well, time will tell. Obviously,
yeah,
I don't hope for it. It's just the structure which is telling me some things. And
but even then, I do think that as soon as companies keep growing, we are hearing a lot of rumors about GameStop right now with their many billions to purchase Bitcoin. I think a lot of billionaires will get on. A lot of smart people like Warren Buffett might be in cash right now, but if they see what Bitcoin has been doing with all the regulations that are coming, don't you think that? Come on, man. 1K.
Yeah, no. Well, the reason is exactly the chart I'm showing here. It's like the Google chart in 24. 24, Google never had witnessed any recession, right? It had a full-blown exponential grow due to the whole world wanted something of Google. It has like if I put it there, we see here the blow-off wave, the final push. It's exactly what I'm anticipating now for Bitcoin. It broke out above the 3, which we have for Bitcoin right now. Prices in the meantime already here. So we have really had this back test now, and then we have the final push under this very steep angle, which is the blow-off wave. Now we get the reaction, which is a very steep first correction on a decade scale. So Google dropped, this is also on a logarithmic scale, it dropped like 85%, which is really, really a lot for a stock like that.
Yes.
And you can see the structure break down here. And the main target, which the target zone I'm anticipating for Bitcoin is below the 4, at least, which is at the 2018 bear market bottom, which is 3K.
Okay.
So, but if we really copy this move structurally, so, and looking at the price, so first plotting it and then looking at the price, not the other way around, then it's below 1K.
Okay, look, you're the Elliott wave expert. I just follow your analysis, and
it would really be not the end of the world, because what happened thereafter for Google was this. Right, so we had this
because sorry, Gert, I have 2 questions. Can you pull up the previous chart if you don't mind?
Sure.
Does the arrow have to go below the 4, or is that like a demand, or how we say, like
No, it doesn't have to, but it would be a really much bigger time frame correction than the one in 2018, for instance, and the one in 2021 and 2022. So the structurally, it should be really, it should scream off your screen, basically, like, oh wow, that's a big depression for that asset class.
People will say that.
usually the second wave is the sharpest, and it's really the test for an asset to, okay, is something solid in there to survive this extreme test. Also, this would come with a really strong recession and depression. So a lot of people would want to buy it,
But they
and
don't have the money.
will buy it at 10K, will buy it at 5K, will maybe buy it at 3K, and then still price keeps dropping. People will lose faith and say, okay, the asset is broken. I don't.
Okay.
Much like the we had at 15K, but then times 10, like
Yep. Like mass
the
hysteria.
feelings. Yeah,
Mhm.
sure.
Okay.
But
Okay.
it doesn't need to drop there, obviously, but then we get like, it should be really sharp at least.
Mhm.
And it should be larger than this 1-2 here, because it's of a higher order. It's a second. So if we looking at that,
Steeper or faster?
steeper. So
Okay.
it should at least hit 15K. Steeper and
15K.
faster.
Okay.
Yeah.
Okay.
So that wouldn't scream from the screen, in my opinion. So I think it go really below 10K at the very least, and it wouldn't be the end of the world, because a lot of
I know.
institutions are looking at.
I know you. I know you want to go here, but I still want to debate you a little bit on this one.
Yeah, sure.
Because there's a major difference between a Google stock and the most valuable, scarce, digitally available worldwide asset. There is no other than Bitcoin. Bitcoin isn't fate in a company. It isn't. It is unique in its own way. It is gold 2.0. It is a whole different asset class on its own. It is the best performing asset ever. You know, so
That's true, but that was Google as well in 2028, right?
yeah, but Google is just a stock. You know, Google is just a company.
It's another exponential growing asset, much like Bitcoin, and you can see the structure is almost identical.
Yeah,
so
I fully agree.
They're behaving the same. And look, at 15K, a lot of people haven't bought. Who are now screaming, we're gonna buy like tons of Bitcoin. So would you recommend, like, if an institution came to you right now, would you recommend them to buy Bitcoin right here, right now? Would you say, oh, well, let's wait for 2 years and buy the dip again, like in maybe it will be 17K in the end, just a higher low again. I don't know, but I wouldn't recommend anyone to buy Bitcoin right now, because it's already up 7x from its bottom. Why would you buy it right now? Right?
But okay, but if we don't see the orange arrow, then if you were, because right now you're saying this because we're going from 4 to 5, right, in the Elliott wave. So it is the final pump, final wave. So after this, you would expect a drop off. However, if we were in let's say 2017, right? And the price was at it went all the way back down to 3K or something. The point I'm trying to make is that in the drops, the price never goes back lower than what it was previous halving. So I'm wording it a little bit strange. So if price goes below 100K,
well, this cycle it did, obviously. Yeah, the 4 between brackets here dropped into the 3 top here. So people are the 22, 21 top are counting it as a real cycle top, but I don't do that. The reason is because it's not a full Elliott wave, so it's a subtop.
Yes,
also, on a lot of indicators, it's showing it's a subtop. It's not a cycle top.
Even, yeah, I fully agree on there. But if you look at the 3 to 4 on the, where your mouse is right now, the 4 didn't go lower than what the price was at the previous halving.
Right.
It's a little bit later than the 2. So if someone were to ask me,
it did. It actually did. It hit the 3 top here.
Yeah, that 3 top, of course. But
that's during the previous halving, right? It's this period. And during this period, it really dropped to that point. It's really really happened, and that was really so. A lot of people are seeing this not like, okay, it was during this cycle. This was the cycle top. Then we have a drop, and okay, the real cycle top during this halving period still needs to be printed. But this is also an older chart, so it's maybe not the wisest to discuss this in depth with not all data available here, because price is now like here.
Okay. Yeah, that's true.
So, but the point I'd like to make here is that Bitcoin never has had a bear market.
And yeah, I get it. I fully agree. I hear the thesis. I understand the logic, but
how deep it will correct, I don't know. I don't know how deep it will correct, but it shouldn't be a feeling, right? It should be what would be the sentiment at 10K? Imagine that back from 300K. No one wants to have Bitcoin anymore. Institutions who have done so are ashamed, want to get rid of it. Germany buys back because they've seen the strength of it. Maybe. But yeah, it wouldn't be the end. It would be the shakeout of the century, in my opinion. It really can go to millions of dollars Bitcoin to the end of the century. We don't have the time to witness that, obviously, but maybe it gets some faster. But I don't look. Every mindset for Bitcoin is really looking only at a bull market, and therefore highly biased towards a bull market and the depth of any correction that can occur. And that's really the hard thing. Like anyone who would have told you Google would drop that dramatically back in 2008, everyone would say, okay, it's the greatest stock. Everyone needs it. It's like every company needs it. There's a huge base of applications they can build upon it, and so on. So the reasoning always at the top is like, okay, we can go much farther.
Yeah, but now you're talking about Google. Not, you know, there's a difference between the company and the stock. You know.
Yeah, that's right. But the point I like to make is like Bitcoin. On the long time frame, it will be always outperforming any asset, in my opinion.
Of course.
And the real test will be at its first recession. And it will be a severe test for people who are really believers or not. Miners will switch off their racks if something happens like this. So the real, the core will stand up and really, okay, prove whether the asset class is worth it.
Okay. You're saying I wouldn't recommend a financial institution to buy now. Personally, I'm saying to everyone I know, purchase Bitcoin every day. just be in the market. And I just had an interview yesterday, and there were two guys from Sweden doing a research on Bitcoin and on blockchain and these kind of things. And I was pretty much getting them to buy Bitcoin, you know. And one of the things they asked is, how can I get involved? How do I start? And I told them, I personally would just buy Bitcoin every day. It may be 10 euros, it may be 50 euros, whatever fits your budget. Just buy it and expect it to drop down in value. Even if you're buying every day for the next 2 or 3 years, expect it to lose 80% of its value, but just keep buying. And see Bitcoin as the asset that sets your children safe. You know, that's exactly the way I put it. I get it that for a financial institution it might be a little bit different. However, if you say that Bitcoin will go to 300K, then even now at 111 or it dropped a little bit, right? Just now, the 108 or something, it would still give a nice return on investment, especially in the time frame, right?
Sure.
So
but institutions are looking at like 10-20 year time frames, and
so then they should buy it, especially now, don't you think?
I don't, especially not, because that's the next thing. If we get really the steep drop, there will be a huge trust crisis for Bitcoin. Much worse situation than any bear market we've witnessed. like maybe, yeah, I can't imagine what will happen. But the real thing is, um, if you want to have quick gains during high, for an institution, it's if the risks on a recession are high, you should move to cash, forms of cash, to or even hedge your positions for the longer term, to really buy back the bottom of each asset class during a recession. Because on the longer run, that's because timing the market is really hard. And well, you would basically telling an institution to go to become a day trader. Maybe they should do it, but it's a really high risk for their long-term positions, obviously. Much more risk than they are taking generally. So it's really hard to get them to do that. But well, if I were running an institution, maybe that's why I'm not running an institution, I would buy Bitcoin right away.
Yeah, okay. But we had a question in the audience. What would Gert do now at this moment with his Bitcoin? You are already in the markets since the 15K, right? Or at least somewhere around there. So you would just keep holding until the fifth wave plays out, right?
No. I'm each week I'm updating my invalidation target for the fifth wave to fully outperform, and it's moving average, which I use for that during. Let me show. I think it's here. It's this one. If this weekly, if a weekly candle would close below this line, we get a situation that there will be another first big flush out before there might be another top. And the hard thing here is that we could count this move up already as 5 waves up. Now it has broken up. It's really the fifth wave, but it should really strong, like 10% above the previous range. It would be really a confirmation for this fifth wave to play out, and also on a high time frame, it makes much sense. But I would buy, for instance, Bitcoin not like every day, but when it's close in a bullish trend, it's close to a long-term running moving average like this. So I would have I've longed here with a large group of people Bitcoin with forex at 25K. They're still in their trade because we had never seen a weekly close below this line. And we are aiming for 130K because it's like 16x on investment. And once price would drop below this line, okay, that will be the signal. Okay, get out, because every time we got it in the past, we have a nice bounce. So that's once it drops below this line, you get a nice bounce during which you scale out, but you don't get to really breakout back up. So here we have also a situation much like we have now. Like, okay, it's up, but we don't know if it should really extend a bit more to be certain this move is not a fake out, right? Much like here. And but we don't have a signal now like we had then. Like, okay, price has really closed below this line. It's a red flag for me for, okay, we don't get really the momentum is really fading, and we don't get another push to say 200K. Also during the COVID dip, we had it straight before the COVID dip. We had I wasn't in the market back then, but perspective. Well, we had a strong red flag here, and then during this period you could have sold based on that, and then okay, steep drop, and then buy back again when price breaks above the line again and keeps closing above it. And then you get the next wave up. Also here in 20, let me see, we have here this break. It went directly through, but there was a retest during which you could have scaled out and would have be out of the market early enough. to have this another 50% dip, or how much is it? 9K. It's a 66% dip. Also, if we go back to 2015, we have a similar setup. Here it really broke straight through, and so it's really a strong line for support. And also during this whole bull market, it has been tested like 3 times. So each time it goes back right there, it wicks below it, but closes at the line or above. And really at 53K here, I was really nervous because of this line breaking or not. I was telling people, okay, get ready to get out, because if it breaks down and we close below, then you can get wicks, which can really fast wick lower, but it didn't. So we held a position, and back here I was really nervous again at 75K, but that was also what I was telling people, okay, because on the higher time frame I still expect the move to 300K. I expect price not to drop below 74K at this point. I told it at 75K, so you could have set up quite a nice long there based on that information. With a nice stop loss at 73K, for instance. But then you would have grasped this whole move up. So this was a big.
And what moving average is this? Is it 50 to 100? What kind of?
It's a 40-week moving average.
40-week, okay.
Yeah. So it's a really important thing for me to gauge the market, whether it breaks bullish, has a red flag, and if you have a red flag, most of the times you get a chance to scale out during a nice dead cat move, but don't expect it to pump further. So at the current moment, this line lies at 81K, but in my newsletter on Substack, each week I update it like, okay, if you look at week 21, you will see, okay, the invalidation lies at 40K. Everyone is like, okay, chill, it's 63K, so no worries. And then we get to week 25 and everyone is, okay, getting nervous, like, don't hope it breaks below it. So, so that's my answer basically. It shouldn't close, and you should always have a thesis with an invalidation point, because you don't know whether your scenario, because it's not. I don't have I'm not a wizard, right? So I don't know how the market will, how the chart will be next year. I can have expectations based on several methods, like the Elliott wave things that work generally, but there can be misreadings, and market can turn quickly, and you should adjust to the market and not the other way around.
Okay, I see a lot of XRP supporters in chat. I personally hate XRP, but I think they might be your followers. So
yeah, sure.
Is there a reason why people are talking about XRP? And would you like to get in depth a little bit about the project itself? Because I think XRP is just a centralized scam token by the Ripple Foundation to pretty much fuck retail. I'm not saying it won't go up, don't get me wrong. I think that XRP will go to like $5 or maybe $10. But again, that is a linear thought. Because you probably are going to pull.
I see. Well, I'm not much looking at all kind of narratives. That's maybe my could be the reason is I'm looking at charts, whether they are bullish or not. And obviously, XRP is a big crypto. We can discuss about it, whether it's shit or not, but it's a big crypto, and it has broken out bullishly, has printed an all-time high, based on we all have seen like the SEC case, obviously, and the nice thing about XRP is like the setup, which is very similar to 2014 to 2017, where we broke up right here with an all-time high, then had a period of consolidation. This is on the monthly chart, so you don't see it, but and then we get this really steep move up, and that's where a lot of people bought and are holding, like, okay, 2018 like for 7 years.
Yep.
And still are, well, they now have back their money, but are still not not any gains, right? Or you should have bought here. Also here, I've plotted the 40-week moving average. Let me see how well it does here. Well, if it's below the line, those are good points to enter, basically, in the past. Here was a very good point, obviously. Well, I see I've got not enough decimals. But a scam token, I wouldn't say, because I don't see really a rug pull yet. But maybe it will be like Luna. Luna, I called.
They won't rock, don't get me wrong, but I think that if you pre-mine all your tokens and you just sell them to the publics and you never intend to have buybacks or whatever, and people are insanely misinformed about what the XRP token actually is. They think it will be a new payment system. They think the XRP token will replace Swift. It's simply not true. It is the XRP ledger that might be able to move liquidity worldwide. Don't get me wrong. They have a use case. They have a platform. But the XRP token has way too much supply. The blockchain is a fraud. They're missing the first 10,000 transactions or whatever. There are so many things that are fundamentally not right at this time. And also, when I'm looking at what is happening at the White House, they are pretty much barring the CEO of Ripple right now. I do think they fought a battle that was worth fighting. I was supportive of Ripple all the time for this legal battle. However, a few years ago, when Kamala Harris was running, they were pretty much saying they would want to be the CBDC platform of the future. I hate these kind of projects. I hate these kind of groups. They were donating to Kamala Harris before Trump. I'm a huge Trump supporter. So there are so many things I despise about Ripple and XRP.
That's the feeling I have about meme coins often.
In a way, I think you are in fact a clown if you are a Ripple fan.
Yeah, I see, totally. But I'm not looking much into all kinds of narratives like that. You see, but I
just
can
look at the
certainly.
chart.
If you're looking only at the chart, it doesn't look that bad at the moment. That's the only thing
Yeah.
I'm saying.
I get you. You know,
it's not like I'm not into XRP myself, but if you're looking at the chart, we have like a double bottom setting up, which is an also combined like high lows, and then like a triangle which broke out, and we have now a retest. We don't have any bearish divergence somewhere, so it looks good. We have here like yeah, we didn't have one either. Let me see. But if you project like the breakout here, like as simple as this, just take those candles and put them on the breakout here. Well, then it might pump be to $100, right? So it's 50x.
But what kind of market cap would you have with a price target of 100?
Look, if you look at the 2017 bull market right before alt season started, and you would have asked this question, and it would have yielded a similar market cap. Like, okay, that can be the case. It shouldn't cross the Bitcoin's market cap. I don't see that happening. So $100 for XRP. Let me see what their supply is. It's a good question. XRP. They have a maximum supply, which, well, all their supply is around. So it's 100 billion. So that would be 1 trillion, 10 trillion. 10 trillion, that would be 10T. So for Bitcoin. Okay, so maybe this final wick this final wick wouldn't be the case, but it could certainly go to 31. Like this first pump.
I think in a bull case, in a super cycle, a $30 XRP is overpriced, but I can see it happen. You know, I don't want to say that it won't go up, but I do think that you're better off holding a different token as an investor.
Yeah, I see. Yeah, so XRP is really showing a similar setup here, but the target, if you measure it right from the bottom to here, and you put it there, I think we get a different target, like $40 would be max from the perspective. Okay, any other question?
Yes. Now, Cypher Doctor is giving the right score. You have multiple variants of this. Because Mark was asking, can you tell again which tool you use to measure the alt season? And to pretty much take a look at how many people or the long-term holders compared to the short-term holders are in profit, right? Which is the MVRV score, but you have multiple of these of this one.
Yeah, we can look at them maybe, but I don't know how much time we've left.
I have infinite time, man. It's getting
me too.
here,
so let's go then.
Okay.
Let's dive in. Let me log into tool I'm using, ClassNote.
But you just look at the chart, so you're not a narrative kind of guy. You're not looking at real world assets or AI or US based crypto or I don't know.
Yeah, sure, I'm looking at that, but it's not the core of my analysis. The chart speaks first, and then I'm looking. Okay, if there's something in the chart, okay, it looks bullish, like XRP. Then I've also like the questions like, okay, the one you told me, like it's a very normal one. Okay, what kind of market cap would that imply? Will XRP overtake Bitcoin? Obviously, that's not what I'm expecting. So I look for a lot of alignment from different perspectives. So for XRP, it should be still lower for BTC, but if BTC would be at like 300K, we are at a 6 trillion market cap. So it wouldn't be that weird if 40% of that market cap was the XRP market cap. That's something it really can happen. Which lines up, I guess, with the $40 target. But that's something you should check yourself. Well, one moment.
Okay.
Log in live, so one moment.
Okay, well, very interesting still, but I think people should, consider for themselves how they think that the percentages of the top market cap will add up. But how do you look at? So, for example, I think that when you take a look at the top 100 crypto projects out there, I think that you might see a 10 billion for the 100 project. So I see a trend that if you take a look at the 2017 run, the average market cap on page 1 of CoinMarketCap, or at least the last one, was around 100 million. Then the cycle after was 1 billion. So it would make sense for me to see projects go to an average of 10 billion in this cycle.
Yeah, sure. That's something that really can happen, and that should always be offset against Bitcoin. Bitcoin will be king, I guess, for this cycle. So I don't see anything that would be a really big thing if something took over Bitcoin. I don't see it happening in the short. But we wanted to look into like the MVRV.
Yep.
C score. Let me see. Yeah, so what it basically does, we in orange you can see the MVRVC score, and it bounces between the red region and the green region. Well, the colors, they took it great. I've seen a lot of charts that make the bottom one red, but that's where you need to buy, right? So it's the green zone.
Yeah.
So they flipped it recently, so that's nice. But each time you see the peaks of Bitcoin price, you can see in black. It aligns with a strong peak through this red zone in 2013, and each time you can see here. Now it's still quite low, and you can also okay, what if we have like a steep ascent, like the things I showed? Here we have the steepest ascent. Here we have one, and here we have one, and each time it's around this zone where we actually right now it's pumping straight up, like in 6 weeks. Also, what we are having here are higher highs, higher lows. So the structure here on the MVRV is really still bullish. So it's really okay if it pops, and we are in this zone, and it's really everything aligns. So then it's a good time to really maybe short Bitcoin even with low leverage. So that's the MVRV, and it's always nice also to look at long-term holders versus short-term holders. I don't think not for this particular one, but I'm always also looking at the Rodel ratio, and the reason for that is back in 2013 we have had two major peaks, like this mid-cycle peak here. So we have the rally here from 2012 to here 2014. And we have this mid-cycle point where a lot of like the MVRV are showing a peak. So a lot of people scaled out right there. So that's a false signal in my opinion. Or at least, okay, you could have bought back later on, obviously. And but it was not the cycle top for that. If you're looking at the end of the year, it was way higher. So that's why I'm looking always a bit more at the Rodel ratio, because each cycle top, which I've shown on the chart, let me see this one. So each major cycle top, in my opinion, so not the 2021, is really hitting the red zone here. Like, okay, that's the top, a real cycle top. And so we saw it here, there. So 3 times we've seen that. In 2021 we had a mid-cycle, much like we had a mid-cycle signal in 2013. So going sideways, then breaking out, and then the real top was later on. So I'm expecting this one to really blow off into the red zone again. And then we have the closing signal basically for this bull market, which started in 29, and we're ready for the really big bear market.
Okay, and what exactly is the realized hodl ratio? Because the MVR RV is a percentage, right, of how many people are in profit. What exactly is the realized hodl ratio?
Well, it basically says that the amount of hodlers, long-term holders, you want them to see rotate their bags, basically to sell their bags. So the whole population holding Bitcoin, the average, you could say the average age of everybody holding Bitcoin, and the age is how long you are holding Bitcoin. So if you're holding Bitcoin for 3 years, okay, your age is 3 years. If the population gets a bit older, there will be people sitting on huge gains, and they will rotate eventually during high pumps. Even their bags, okay, even they are willing to sell. See, so and then they rotate it to other holders, because if you sell, someone is buying, and that's basically always what makes the momentum fade during those high peaks, because you see then a lot of wallets coming back online, which have been sleeping for like 10 years, 12 years. And that's basically what you're seeing. And then the Rodel ratio, if that's at a very extreme, that a lot of people are selling who have held really long, the whole population, the average age of Bitcoin holders basically drops. And that's basically the signal for, okay, okay, we need another accumulation phase. Basically, have a drop and have an accumulation phase for people to scale back in, and have the next run. Because long-term holders are always winning over short-term holders. If that's also very clear if you look at long-term holders. Let me see the NUPL, is that?
Yeah, the net
long-term holders
realized profits.
Yeah. Long-term holders don't really capitulate. Only during look, people were still holding at a top where the roll ratio peaks. Then you have a really small amount of people which are really long-term holders, but they are starting to capitulate. Long-term holders. That's often like a bottom, sideways bottom time period. We see it here in 2019, in 2015. We can see it in 2012. And we have also witnessed it in 2022. Each time we see the severity of the capitulation is a bit less. So people are getting used to these bear markets, which is also a strong sign. Okay, there needs to be another shakeout of the people who are still holding here, to, well, basically hand over their money, their bitcoins to institutions. Because institutions will keep buying from this point onward. Then at the upside, we see the euphoria in blue. And that's, well, we have not seen these levels yet. But if I'm certain if Bitcoin would pump right now from in like 6 weeks to 300K, that we are high in the blue zone for long-term holders, and that you will see a lot of wallets coming online. Okay, let's swap this for altcoins, and then you have 2 weeks of alt season, maybe somewhat longer, somewhat extended. Then the whole thing rolls over during a recession. If you're looking at the short-term holders, it's nice to see, because short-term holders, you can see what the market basically is doing. Basically shaking short-term holders all the time between capitulation and a bit of hope. They are never getting euphoria, basically. Short-term holders are always, okay,
being
capitulate.
Yeah.
Yeah, so that's what the market's doing. Short-term holders are really shaken out in all kind of directions, and then in the long term, there are certain points in time where long-term holders are willing to sell their tokens, because then everybody is doing it, because the gains are that high. And if you see all the people doing that, like the roll ratio, you see it going up. You see those. So it will be a great sign, actually, if we can see a lot of wallets, because a lot of people are selling, because they are seeing people moving their tokens online to sell them, long-term holders. That's a great sign for, okay, we are in the final stage here. So it's actually something I'm looking for. Should really peak at the peak.
I want to pick your mind a little bit. I really value these charts as well. However, there is one scenario I have in mind, which I'm curious what you think about these data points, because early on the live stream we spoke about the Great Depression that might follow, all the dangers, the last wave, we might get a crash, right? You even estimate the 1K level. I'm also considering a scenario. So we have a regular cycle, which is what I think, personally, I think it will be between August and November. We might see an extended cycle. So if a lot of the regulations and countries start buying, institutions start buying, I think it might be extended a little bit to early 2026. But I have third scenario as well I want to share with you, and that is I would estimate about a 30% chance of it happening right now. But I think that when the countries and the different companies around the world start to get mass hysteria and they start to buy all the Bitcoin that is out there, because right now there's also you can pull up the chart, right, with the inflows, the amount that's being purchased right now. There are many charts pointing to this. They have a steady growth in how much is being bought, and also this year more than 3.5 times as much has been bought than what has been mined. And also, could you open the chart real quick on Glassnode with the Bitcoin on exchanges right now? Because if you take a look at the chart, you can see that in a period of 1 year, supply on exchanges went from around 3.5 million to it should be
it's supply on exchanges.
yeah. Okay. So it went from 3.5 to like 2.2 or something. So in about a year, 1.5, ever since the spot ETF launched, 1 million has vanished. We now, for the first time ever, see an actual downtrend in the supply that is available on exchanges. And if you cannot find it, just believe me.
Not right away. Maybe these are the net changes. So you see here a great spike in red. This means like a lot of Bitcoin is leaving the exchanges. If it's red, if it's green, it's the other way around.
It's called balance, I think, on CoinGlass.
Oh, yeah, of course.
Oh wait, you're using Glassnode. Wait, perhaps balance percent balance on exchanges maybe, but that's the percentage.
Well, I should really look at just up here. It's in has to do with exchanges, and it's just
the total.
It's just this, yeah.
Yes. Yeah, so this one shows a different number. However, you still see the downtrend, right? So we went from 3.4 million to the orange line is the supply. On this chart it went to about 3 million. Still there's a decrease right now. And if you take a look at CoinGlass, it says a different number, and all these parties show a different number, which is odd to me because it should be open and transparent. But let's just assume that it's going down anyway. If countries start to buy, and if companies start to buy more and more, and if Bitcoin treasury companies start joining the party, pretty much, because there are already 85 companies doing the same right now worldwide. If supply runs out, I think we might see something like this happening. I know the numbers are wrong, but I want to share a chart real quick. I'll quickly share my screen for 1 second.
Let me comment a bit on it, because we see a lower low indeed on the exchange balance.
Sorry. Wait,
I see your
remove. I put yours. Yep.
Yeah, so we see here a lower low and a lower high. So we have a bearish structure, right? So this
for the first time ever.
Well, broken. Yeah, exactly. So I see that happening, but we shouldn't. We're just talking about short-term holders, and who are the short-term holders at this moment? Who are going to be shaken out? Institutions. They are really children in this at this moment, and at first they'll get a rough ride, like every other, I guess. Before really over a long time they can accumulate and show faith in the system. But look, when everything gets green, there will be always a lot of institutions willing to buy. But once we get the first wick down from, say, 300k back to 150k, they are going to they're not used to that. They're used to be in gold or in really slow moving assets. They're really not grown ups in this space. And
that is actually an interesting perspective, because they will pretty much experience what everyone has experienced at some point in crypto.
yeah, I guess so. And so there's obviously there is a case for it, but there will also be long-term holders smiling at the sidelines and starting to sell against their buying pressure, because we need exit liquidity at each peak. This time it will be the institutional institutions, I guess.
Okay.
So, well, we'll see. But it's a nice scenario. It could play out if every country starts to buy Bitcoin right away. But there's also a lot of long-term visions, like, okay, let's gradually buy from the cold holdings of our country some Bitcoin, because it's kind of modern version of gold. That's how a lot of institutions and governments are looking at it. So let's diversify, basically, because it's a strong market. Let's get into it, but not too fast to really over a long period of time. Bitcoin will reach the 300 million level if it survives a shakeout like I'm anticipating.
Okay,
that's really the litmus test for Bitcoin. Is it going to survive during a recession? Last recession, it was a response of the recession. What okay, we want to have something which is really better than anything else. So let's see if it survives here.
Okay, I wanted to share this this chart with you real quick. The numbers, of course, the chart is not updated until 2025, but I didn't want to spend too much time finding the actual updated images. But right here, you see, I think they are calling this the S curve. At least I'm calling it the S curve. But you see that the logarithmic chart is on here, so we pretty much see the Bitcoin price. But as soon as supply runs out, which is a tipping point right now because of the countries buying, because of the institutions buying, I think there is an actual chance that either this cycle or next cycle, but I wouldn't give it any longer than that, we will in fact see that there will be pretty much no Bitcoin left. And I think that because a lot of people they keep talking about diminishing returns and blah blah blah, but I think in fact we will see the chart will develop and we will go up more than ever over a period of time. Because don't get me wrong, this could be 3, 4, maybe even 5 halvings and cycles in between before we actually see a major up move. But I do think that that there is some logic and theory behind this, because don't forget, Bitcoin is scarce, and Bitcoin it will run out at some point, you know, especially with countries and companies buying.
Yeah, sure, but the thing I'm seeing here is like, okay, institutions are gonna buy Bitcoin, but the reason is obviously not to have Bitcoin, but to have the gains of Bitcoin, right? So they're eventually also gonna sell, and they're willing to sell way earlier than like the real hodlers. They are really waiting. Okay, we don't sell at a 20% gain. Maybe you get more high volume with a more choppy way up. And if you're implying a 300 million Bitcoin price, that would make for 6,000 trillion market cap, I guess. So I don't see that happening in the current situation. There should be a lot of money be printed first. So I see definitely it happening later on this century, not at this moment in time. Like, okay, in 10 years, I don't see the Bitcoin grow that fast. But I see it to go to millions of dollars, obviously, and that's the point you want to make. Like, okay, we have the inflection point of supply. Supply breaks down, but the long-term holders, which are shown with the roll ratio, are still holding the cards. Like, okay, if they're re-entering their supply, are selling. this chart will obviously go up again. The balance on exchanges. What's also a nice thing is a lot of people and a lot of companies are exposed to OTC deals, which have a maturity period. So they have to wait vested for like 3 months. And if we have a really quick peak, they won't be, and a lot of companies and people are anticipating a later H2, the next half of this year. They are looking for a peak there and have into play like, okay, we are going to buy Bitcoin at a cheap price, but it's vested, so we get it in October, for instance, or in November. But if we peak early and it has dropped already, yeah, then that would be too bad. So the market always plays the big players as well, and it's really what I'm. If you can share my screen one more time, because I believe in the curve you're showing, but with a shakeout in it. That's what I'm showing here. Is also Google since 2008. It has had the great dip, but it wasn't the end of the world. We get a third momentum wave, which is currently the Google chart is way higher because it was back in 2024. We get the third wave, which is also a momentum wave, which is of a larger degree an acceleration to the upside. And that's what I'm also foreseeing for Bitcoin. Like, okay, we get a steep dip, then maybe it could take a lot of halvings to get back up at 100K. But when we get above that and we get a similar move up like Google got back then at the end of the century, Bitcoin can be trading at millions of dollars, because this is like, let me see, this is 100,000, so this is 1 million, 10 million. Okay, maybe this is a bit too optimistic. And
I think it will go there eventually, because I'm looking at your timeline.
So this is the structural setup for, okay, I don't know when it happens, but if it mimics like what Google did, then we get something like that. And obviously the time window here might be way longer. So this is already over 100 years.
I think in the last 40 years, so in the year, because it ends in 2140, I believe. So in the year 2100, which is 8 years apart from there, they will take 40 years just to mine one Bitcoin. It will go to numbers we can't even comprehend. We are not even able to pronounce it in fiat currency. Bitcoin will.
So if this will happen, like something like this, and obviously this chart maybe shouldn't go that high that fast, but the structural setup, the point I want to make here is we have a first run up. Everybody here at $1,000 would have laughed if you would have said, okay, 300K, that will be the end of this cycle, and then we have a shakeout back to 1,000K, which was a 10x from there. And then we go to millions of dollars. So the $300 million, I think it's an option. But here is the litmus test whether Bitcoin really is valuable or is a trading vehicle, another asset class, which just runs on liquidity cycles.
And I have one question, Gert. Because right now you're comparing it with Google. What does gold have an exponential chart or a logarithmic chart?
Sure.
What did gold do in 2008? Because I think
right now, question, because
right now we're comparing it with a tech stock, and we've had this discussion before. You think in a way it is a tech stock. However, I really view it as the new gold 2.0. So I think especially depressions and recessions, Bitcoin will start to copy behavior of gold.
Yeah, sure. It's an option, but the Bitcoin the gold cycle is way longer than the Bitcoin. Well, Bitcoin is really starting here, and since then gold has ever going sideways while Bitcoin was going up. So there's not the correlation at this moment in time is really not much there. But structurally, there is a thing which is like this cup and handle we have here. I've shown it in 2023 on the logarithmic scale. Like, okay, it's going to 3,000, and yet we are here because we have here on the logarithmic scale. People were laughing like, okay, not gonna happen because Google gold is not going to go there, but now it's there. You see, if you go on the linear scale, regular scale, this is what people would have anticipated for gold. It's like this is also a big signal, like there's something going to happen. This is really a flight to safety. It's halfway. You see, 2,700. And well, in the meantime, it really has hit the target of 2023. So it's a nice thing. But during recessions, you see often gold going in a downtrend as well, but less than all other assets combined. So if stocks go down 80%, gold might go 20%, for instance. That's what we saw.
So during these periods, it is actually smarter to hold cash instead of gold or Bitcoin.
Yeah, and yes, exactly. And then there's a trust issue, and then people are banks are running into gold for the next cycle. And then if you can see after 2008, you see this bull market in gold. You get first this quite big correction for gold. If you just have let's zoom in at the 2008. You should buy at the bottom of the recession gold, because after the recession, let me see. I don't have this measuring tool. Oh, it's here. We have here let me see. We go from 1,000 to. Yeah, it's like a 30% drop on gold during the 2008 recession. What you see after that is, while stocks are going sideways and are creating a structure like this, not breaking out to all-time highs, gold is really quickly recovering and going into this bull market. And once it tops, that's a signal again. Once this goes sideways again, you get a bull market in stocks and crypto, obviously. So here we have 2009 until 2021. And now gold starts to break out again here. So what I'm foreseeing roughly is, well, maybe have a little peak, go sideways, and then during a recession goes down maybe 20% or 30%. 30% is like 1,000 down, like this. Maybe a retest of this zone wouldn't be really weird, right? This is really long year, multiple years broken out. Look at this. This is a good zone to re-enter into gold, maybe. And then after the recession, it breaks out more quickly than stocks. Well, if we look at the correlation for Bitcoin and gold is a much older asset class, so it's hard to compare it directly with Bitcoin at this moment in time. Because the whole lifetime, gold has its own cycle basically, which is much slower and longer. Well, we have here a handle of this cup and handle of like 5 years. So that's 30% of the lifetime of Bitcoin, for instance. So
yeah. But don't you think this will slowly transfer from gold to Bitcoin? What are your views on that?
At this moment in time, Bitcoin is really viewed as a risk-on asset. It's really that's how people look at it. It's risk-on, and even it breaks out later than stocks, so they see it riskier than stocks. That's how Bitcoin currently is seen, in my opinion, and it might grow into, if it really happens without a big. If during a recession Bitcoin is going to hold up with only a 20% drop, then everybody will say, okay, it's real gold. actually better than having stocks. You should just keep Bitcoin when buy Bitcoin when recessionary threats are around. And yeah, so basically that.
Okay. I see Serkan saying you believe in structure when it comes to Bitcoin, but you don't believe structure with XRP. Don't fall to your emotions. I think you're talking about me because I'm not a XRP believer. However, to answer your question, there's a huge difference between XRP token and the most unique, best performing asset in the world. You are believing in a company. I am believing in something that is unique in each and every way, something we haven't ever seen before, something that is decentralized, truly scarce. You cannot compare apples with pears, you know, there are two different worlds. So I think this was the comment you made with higher targets. So for example, 10 million or 100 million for Bitcoin. These are realistic targets because it makes sense for Bitcoin to keep behaving in an exponential way, where XRP simply will not do this. It is just a regular stock like anything else. It is a
Yeah, I
crypto
see.
asset, and there's
And also,
too big supply. It's not the same.
also, I think it might touch a bit on the comment I made. Like, okay, it can't cross Bitcoin. So if we are just structurally comparing it, and the target exceeds like the Bitcoin market cap, okay, I don't think it's emotions there. It's just not something I'm expecting to happen. So it
Yeah,
should.
it will not happen. Of course not. No, it will not
No,
happen.
no, no. But it should. If you have targets, you should always compare it. There was a really great question of Bitcoin, just to say, okay, let's compare the market cap at those values, because that's something you always have to do, and that's also if you need all the money in the world to buy, for instance, XRP, yeah, it's not going to happen. People still want to buy cars. You see,
Mhm.
so yeah, it's that there's a capacity of money, and a small percentage is available for like crypto at this moment.
Mhm.
And if the targets exceed drastically those percentages, yeah, I think it's not likely to, or it's not smart to be anticipating a move like that, because
Mhm.
it's really unlikely.
What is crazy to me is that you either have XRP believers and they truly believe it, like it is their own own company almost, you know, or you have absolute XRP haters, and of course in the middle is retail that doesn't know shit and just buys the top five, you know. But I'll always speak to XRP believers, and for some reason they are indoctrinated to a different level. They got brainwashed by pretty much a party that works for banks, and they don't. The, what's so crazy to me is that you want to invest in a token that a party put out just to sell to you, that they have no intention of actually using to move their liquidity, which is the primarily reason why everybody is such an XRP fan, because they think it will replace Swift and blah blah blah. And they actually had the intentions to run all CBDCs worldwide. So they don't have the best intentions with you. It is almost like you're telling people to get vaccinated, to me. So um, you are brainwashed. You live in a world full of illusions, and you will lose in the end, because um, it is not a great company, not at all. And I hope that you look further than actually believing that XRP might be the token to do payments in the future. We will never see a future where XRP will be the payment method. The ledger might be used to move liquidity across banks. They might build great technique for banks to use, don't get me wrong, but they're already doing that. And we haven't seen anything happen with the price for the last 7 years. It was better to hold a stable coin, honestly. Every other crypto I had, and I have held XRP, I bought it once they got sued. So I bought it at like 30 cents. I just got in profits last year. It was the worst investment I made. So the future of XRP is not bright. And I think that Ripple as a company will not go anywhere. It is a big company with huge resources, so the price will go up. Don't get me wrong, it will go up. Of course, XRP will easily go to $5 or $10. Maybe in a super cycle, bull case, whatever, I can see it go to 30, like Gert was showing before on his charts. I don't want to deny that XRP will just go down from here. That will not be the case, especially with the huge community and fan base they have. But the future you imagine, it will never happen. It will never happen. And it's not a rant, Matt. I'm just giving you the truth. And it hurts you. You get triggered by it because you don't like what you hear. But you will look back at this moment in time in a few years and you'll think, damn, the bald guy on the internet was actually right. And I'm now using a central banking digital currency. My XRP has done shit. And I'm a loser. That's exactly what you will think.
And always look at the first 3 letters of Ripple, right?
Yeah.
Yeah. Don't buy things which have to have a too nice name if it's gone.
Exactly. Do you have anything else to add, Gert, or shall we call it a day?
Well, if there are any questions left, I'm open to it. But maybe we are already like 2.5 hours or so. Great job so far, I guess.
It was amazing, and thank you so much for all your insight. You gave me a few new perspectives as well. So especially the remark that institutional buyers will have a same first experience that most of retail had.
Yeah,
is something I didn't really consider or thought about a lot. So that is something I will
trick it a bit.
I will sleep about it and give it some thought as well, because it does open my mind a little bit.
Right?
Yeah, it makes a lot of sense, and because I've been looking at the markets for quite some time. When you talk about the mid cycle, so the 2021 top, which wasn't the cycle top, for me this was the manipulated cycle. FTX exchange crash was a CIA job. I can never prove this, but it's my thoughts. It was the banks trying to kill Bitcoin. They failed. And now they are embracing it because they couldn't kill it. So now, if you can't beat them, join them. That's what I think happened over this period of time. I have some information from 2017. A friend of mine, his father worked at a very high position at the ING. It was confident information. But back then, all the way in early 2017, all banks came together and they had an emergency meeting about Bitcoin and about crypto. And they were discussing, what will we do? And what the banks did, and what banks always do, is they slow down, try to get a grip on it. And they're not stupid. The banks control the world. So in a way, where Blockbuster just gets killed by Netflix, the banks, they have the power, resources and control to slow things down, get a grip on it. And that's why I always said the banks will not vanish. They are too strong for this, and they will survive.
Sure, they will take over the crypto sphere, and that's exactly. Then you have that's always, if a company is not that decentralized, I'm reluctant to buy stocks of or crypto from it, because the whole key thing about Bitcoin was get decentralized as fast as you can, because every time we get a big recession or something, it's the big guys not having their things together, right? They're having big mistakes, really big scams. So if you want to move from a world with TradFi, centralized, regulated central to decentralized, you mustn't be invested in companies that do exactly that.
Exactly.
Because you are maybe gaining some money, but helping the world not into the right direction, in my opinion. Regulation is good, obviously, because it makes things clearer. Also but we shouldn't have the middleman, which is really the banks here. Shouldn't take the place of exchanges, for instance, in my opinion. So.
All right. Anyway, thank you so much, Gert, for all your time. Thank you for being here today. Again, I look forward to seeing you next time. Hopefully, when Bitcoin is at 300,000.
Maybe in 5 weeks. So maybe we should schedule already, because at that time I will be really busy.
5th of July.
If it really happens, I will be busy. And let's see.
If it happens, I'll be celebrating anyway, Gert. So take your time.
Me too.
Questions.
Thank you.
I'll be at fucking the beach. See you so much. Like the video if you want to see more, guys. Subscribe and follow Gert van Lagen at gertvanlagen.substack.com. It's down below. Thank you so much, guys, and have a wonderful.
I do crypto, this ain't gambling.